Hey guys, welcome back to the channel. Corey here. I hope you guys are having a great day. Let's get right to it. I want to talk about Upstart, one of my favorite stocks right now, and I am very bullish on this stock in the mid to long term. There's really strong core fundamentals in this company and a really good business model. They have lost money and haven't beaten the earnings a couple of times, although recently they have, and analysts are now projecting that they're going to beat the EPS by 165% in the next 6 to 12 months. So Upstart, in my opinion, and a lot of analysts' opinion, is going to skyrocket in the next 6 months to a year. Considering the AI craze and the AI 2.0, Upstart is an AI cloud-based holding company. Upstart, in my opinion, is really looking strong. So I want to go over the technicals, the fundamentals, the PE ratio, stuff like that, and show you guys what I think's going on and where I think Upstart is going to be trending. Then I'll show you guys some trade ideas that you can get into, because I really believe Upstart is going to be working its way in an upward direction over the next 2 to 3 months. Right now, it's really at a rock bottom. Let's dive right in. And now that the Federal Reserve is looking to cut interest rates this year, creating a bottom for Upstart, really, because that's what it's going to do. Upstart's customers, who are ranging from personal loan borrowers to mortgages, they're going to likely see a reason to look to Upstart for solutions. That's what they're going to be looking to do. And lower interest rates are going to spark a new wave of activity for Upstart. And that's based on what the analytics are saying. I agree with that. Look at Carvana and the AI space that's going on right now. Warren Buffett investing into DR Horton. A lot of things going on. And Upstart really is at a rock bottom, and they've been pretty resilient. So with the analytics and the data and the trend and AI and the Fed minutes and all these things combined, and then beating the previous earnings, as long as Upstart can beat earnings on the next earning call, like, it's an expectation game. That's exactly what the market is. It's all about expectations. And if they can beat the expectations by any margin, even if it's razor thin, Upstart is going to have the momentum going into the next earnings to really stretch its legs out and run. And I think that it's really critical that Upstart has a good earnings call. It's very important. If the next earnings is a bust, then Upstart's in trouble. But I don't think that's likely, because they've already projected an even better quarter than the previous one, and they beat the earnings on the previous one. So I really feel Upstart is in line with a really good run. This is why markets are willing to pay it forward, really. I mean, the market ratio of 113 PE compared to an average of 14.5 or 14.6. Like, they're really willing to pay the premium for this stock as being technically overvalued and overweight. So I think that Upstart, when you look at the chart, has a lot of room to move. And what I'm going to do here is I'm going to pull up the 4-hour chart over the last few months, and you can see how it's made some really big highs, okay, back in August. And then it came all the way down, which makes no sense, because they beat earnings here. They beat earnings here as well. And then go figure, they don't beat earnings, but yet the price doesn't go down much at all. And this could be catalyst news related. I mean, the AI space is really finicky. If we go to the daily chart and pull this down, you guys are going to see how rough this really is. Upstart started around $30, which is where we're at now. Came all the way up. You really can't count anything during the pandemic in 2021. I don't count anything. Anything that happened between 2020 and the end of 2021, almost a 2-year period, March of 2020, all the way to 2021, 22. I don't count any of this. This was overinflated, overbought, and overweight. I don't see any need to have any of that. I cut out everything from here to here was worthless. It means nothing today. This is inflation, pre-inflation at its finest, and overvaluing at its finest. It's an overvaluation, and I'm just not going to bother with anything in that area. What I'm concerned with is where it started, which is $28, and where we're at now. We are at the exact price pretty much of where it launched back in December of 2020. So with Upstart, I really think that it's going to run, because it launched right in the pandemic, and 2021, there was a big market boom. Really can't count that. It settled back to where it started which is at a low, but they're beating the earnings. So the company, in my opinion, if I was going to draw, you see how it's come down here and then it's kind of come up, down, lower low, lower low, and then it's settled right about here is where I think we're going to start seeing this wave. I think Upstart is going to come up like that. I think something similar to this is going to happen based on fundamentals and technicals. You can see here how they get smaller and smaller. Right now we're at a flat line. And if we, right now we're kind of like, see this? This is a breakout waiting to happen. We are at the midst of a breakout on Upstart. It really is. And if I want to clean these lines up a little bit better, guys will see exactly what I'm talking about. Let's get this line here. There we go. You see that? There's a breakout coming somewhere between now and mid-April. That's what it looks like. If we really dive deep into the technical analysis here, you'll see that we can be very accurate. So somewhere around here, there's going to be a breakout, which is May. It could be May. Somewhere between now and the middle of May, Upstart's going to have a run. It is going to have a run. It very well could drop. Keep in mind, the stock price right now is exactly where they launched. So it is rather unlikely in considering we're in the AI space, the cloud-based AI. So I highly believe, and based on all the analytics, that Upstart's going to have a run somewhere in here, and we're going to end up retesting this $49 area. If we can get past the $49 area of Upstart, that's where we're really going to make a run. And I'm going to show you how I handle my technical analysis here. I'm going to run the 4-hour chart again, and I am going to show you guys how I do this. I'm going to go in, and this is just my price action area of interest. Believe me when I say prices very much respect high area of interest like this. It could be a supply zone, demand zone, or just an area of interest, which I'll show you in other stocks. So we've got there. We're going to go ahead and come across here. We're going to draw another area of interest just like that. Pull it across. And you see if I draw this box all the way over here, you see how it's an area of interest? They go slightly above. You see, it's very accurate. It broke above, but then came right back down, meaning that this general area is an area of interest. And I use these to give me guidance anytime I'm trading. You see this area of interest right here? Come up a little bit. There we go. And you can clearly see every time it goes near this, it rejects, rejects, rejects. We've got all these touches. Rejects, almost rejects here. It rejects again there, here, here, and here. So this is a very strong zone, and so is this. Okay? So for this stock, it's going to consolidate, and I believe it's going to come up, and we've got to break through one here. So we've got to get through $36, and then we're going to have to get through $47. But that is my analysis on price action and where I think Upstart's going. But at the end of the day, Upstart is going to end up doing one of these numbers right here, and it's going to have some runs. And my price target for Upstart 1 year out, I would anticipate Upstart's going to end up somewhere in the 47 to 55 range. That's where I'd like to see it, but I would think that Upstart's probably going to double in the next year. It's likely, but it all depends on earnings. You know, we go over to the overall earnings right here and the net income. It's actually leveled off in the second quarter. Third is a little bit better. Fourth is a little bit better. And this upcoming quarter is supposed to be even better. We need to get back to Q1 2023 right here. Their net income is going to have to get better. Analyst rating is sell, but we're neutral on the technicals. I'm a little bit more bullish on the technicals, but everybody's got their own opinion on where it's going. But you can see that Q1 23, we're still better nearing the end of the quarter. We went a little bit higher, came down. We didn't quite beat earnings. We lost. We missed it. Upstart missed the earnings here, but they beat it on the fourth quarter, and they're estimating it to be a negative 0.36. If Upstart can be 0 or better on this earnings, that's pretty much exactly what they need. Just want to show you guys one really important thing here in the financials and their year-over-year growth. Very important metric and analytic when you're looking at fundamentals or technicals in the financial portion of a stock. And it's really important to note that in June of 2022, which is the second quarter of 22, is 228 million. You can't quite count that per se because, like I said, it was right around pandemic. You look at quarter three, they're down to 157, then 146, then 102. They went rock bottom in the first quarter of 2023. This is what I'm saying. 2023 was a recovery year from 2022, which was a recovery year from the inflated 2021. So what happens in 2023? 2023 was really the first year of the stock market being somewhat normal since the pandemic. When we look at 2023, it shows us a story exactly concise to what I was saying previously. Quarter one, 102 million. Quarter two, 133 million. Quarter three, 134 million. Quarter four, 140 million. This next quarter in 2024, based on this pattern, should be about 145 to 150 million, which puts us back on track to quarter three, 2022, where everybody was feeling like Upstart was profitable. So we are already back on par to quarter three of 2022. If the next earnings is reported and we're anywhere near 150 to 155 or even 160 million, we are right back on track, which is exactly what Upstart needs. But if you look at this pattern, you can clearly see that the revenue and total year over year is going up. So Upstart has definitely been bullish the whole 2023, the whole calendar year. If you look at it, it's clear as day. They've went from 100 million to 140. That is incredible. That is like a 40% growth in 2023 to rebound back. So Upstart is very, very good right now to buy. I would say that Upstart is definitely going to impress us on the next earnings. I've got a really good understanding of their overall year-over-year growth and their technical and fundamentals. And I believe this is the rebound that Upstart needs, and it's going to happen on the next earnings. So let me show you. Next earnings on Upstart is May 7th. And I'm going to have some videos coming out on Upstart prior to this earnings call, because I'm going to be showing you guys how you can sell some puts and buy some calls or earnings and really just, you know, make that cash, make that dinero, you know, lots of money. So right around this time, I'm going to have lots of other videos showing you guys how you can make some money off earnings. Lots of stuff coming up. You got plenty of time. But like I said, with earnings somewhere over here, I'm going to draw a line or a box. There we go. So earnings is right there. We're probably going to see price peak up here, come back down. It might come down a little bit here and retest, and then it's going to start going up. So I'm going to try to sell puts to get in down here, but it's going to go up. And if the earnings beats the expectation, because remember, it's psychological. The whole market is expectations. So if expectations are beat or met somewhere around earnings here, you're going to see the price going up. It gets beat or met, preferably beat, then it's going to keep going up. So breaking $30 or $32 is going to be fairly easy, especially if they beat the earnings estimate. So really with Upstart, the bottom is $20, as you guys can see here. All these touches, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 20 is the bottom. It really is 21 actually. And if we zoom in, we could see the bottom right here recently is 23. I would like to get into Upstart at 23. And right now, the current price of Upstart is $26.89. It was up to $28.20, I believe. Yeah, right here, $28.20 this previous week. However, I would like to get in at $23. And I'm going to show you exactly how you can get into Upstart a lot cheaper than $26.89. And it's likely that the stock is going to come down to around 25.50 or 26 this upcoming week. It's possible, although you can see this candle and this candle here are both rejecting. And if we look at The technical's pretty close. We can see that we've got ourselves a pretty decent consolidation, and it looks like it's in a slight upward trend, although there is some resistance here. So what we can do is we can get in at a cheaper price, and I'm going to show you exactly what I'm talking about because I'm bullish on Upstart. I really don't see the price going below $27 or $26 long term. It might dip down to 22 or 23 short term, but even that I think is a stretch. I really think 23 is the bottom here going forward. I really do. It could dip, like I said, as low as 21-ish down here. This is the real bottom, and it looks like recently 23 is the new bottom, so to speak. So I want to show you how we can get in cheaper because we don't want to pay full price. We want to get paid to enter this stock. This way, we can collect some premium before we actually buy Upstart. Because remember, the worst thing about buying options is the fact that you could lose money and most likely will lose money because most of the time people are buying out of the money options and the delta is less than 20, which means you pretty much have no real chance of success, like less than 20% or less than 10%. But when you sell options, the deltas are usually in 10, 20, sometimes even 30. That gives you a 70, 80, 90% chance of success. So we are going to look at selling puts on Upstart. Let me show you what I'm talking about. We obviously don't want to pay $26.90 for Upstart. We want to try to get a much better price on this. So what we're going to do is with selling options, this is just Robinhood. You can use your own brokerage. It doesn't matter. It's all the same. Expiration date, if you're watching this in the future, does not matter. The strategy is the same no matter the time or the date. So what we're going to do is we're going to look at selling puts on Upstart. And when you're selling credit spreads or iron condors, you can lose money. When you're selling cash secured puts, the worst thing that can happen is you just get assigned the shares. And we're already talking about Upstart and how much I love Upstart and how I'm bullish on it. And if you feel the same way as me, then if you get assigned, it's not even really a bad thing. You're kind of wishing you get assigned. In fact, there's times where I sell cash secured puts and the price, let's say I'm selling a cash secured put at $27, the price will get, to $27 or $26.99, and then it goes back above 27. And I'm sitting here at 3:50 p.m. on expiration day, and the price is above my put. And I'm like, oh, I was kind of hoping to get assigned. There's going to, be that excitement because you really want to get assigned. So that's what makes this strategy so good with no risk, because the worst thing that happens is you get assigned the shares that you already wanted. So there's no downside to that. You already want them. You're collecting a premium to get in. You get assigned. You're getting exactly what you want and you're paying less. So there's really no risk here. And I'm going to show you exactly what I'm talking about. So I showed you the bottom was 23. If we come down to $23 put, 92% chance of success, 6 delta. This is a very low delta. This is almost like, this is just not going to happen. Almost not going to happen. Like, it's very, very low chance. The premium is not there either. And that's because the delta is so low. And it's just not quite worth it because I just don't see it dropping that low. We need some middle ground. If we go up to, let's say, $26, the delta is 35. Now, on a stock like Upstart, we click buy, we can see the implied volatility is 83%, which means it's in the 83 percentile. 50% is average. So this is above average implied volatility, or IV. So I would think that 35 delta is a little aggressive. However, I want to get into this stock, so you could, but if the stock drops to 25, then you're getting in at 26, you're at 100, but you're collecting $70. So you're going to be probably out $20, $30, $40 or more if the price drops. You want to get into this stock anyway, so it's not a bad thing, but I would aim for a little bit lower of a delta. If the volatility, the implied volatility is above 50% on a non-dividend stock, I really don't want to sell cash secured puts unless the delta is like 25. 20 to 25 is a really good delta because then you're getting a decent premium. There's a slight chance you get assigned, but it doesn't matter because you want them anyway. That's a good number. If this was a dividend stock, you probably would want 30 delta because the implied volatility on dividend stocks are ridiculous. They're like 20%, 30%. Nothing's happening with them. You could go a month and they might only move 2%. So you're totally good there. With Upstart, though, It's not really a volatile stock. I mean, it is, but it's not crazy. So I would think that you could get away with 25. I would really want to do 20 to 30 because I want to get in. And I don't see the bottom going much below. So let's look at 25. Almost an 80% chance. Delta's 21. 25 is going to be good for most people. You can see it's worth about 39. We click here for the cash secured put. We continue. I'd want to sell it at 35. You'll get filled. It's right in the middle if you want to be a little more aggressive. You can wait for the price to drop in the morning, you know, during power hour. And if it starts dropping, you probably could get filled at $40. But, you know, just for the sake of it, we get filled right here. Review order. $2,500 collateral. We make $35. If Upstart stays above $25, we get to keep that juicy premium for ourselves, and we go ahead and we do the same thing next week. And if we can do this week in, week out for say a month, we'll collect $140 in a month. And then if we get assigned at $25, then our average price isn't 25, it's actually